Traders, welcome back to your market roundup for November 15th. Corey here with you. Quick reminder to make sure you follow your trading plan. So as we look at the markets here, we need to think about where we're at in context of the major trend and then kind of look at these minor trends. Last week, I was quite bullish. I talked about how the market was just able to really shake off a lot of bad news and was doing pretty darn well given the circumstances, and even put out a new class on the advanced decline line talking about how the majority of stocks were actually advancing. It's just that the big names were going down, Apple and Amazon and Google, and it was my opinion that they weren't really in danger of collapsing to the downside. So you were going to get a bounce out of them, and the other stocks were advancing, plus just overall bearish sentiment. I thought it was a really good recipe for a rally. And we've seen one of the best rallies over the past year, certainly, in the market. So today was a little bit of a continuation of that. You can see the markets were broadly higher. The most beaten down stocks were actually the strongest advancers during this rally, which makes it a little bit difficult in that even if you were bullish, some of the bears that you may have wanted to have on certainly went up as well. So you have a couple of bears, you have more bulls if you're bullish, if that's the way you felt and you were positioned. So it was a good scenario, but it wasn't a great scenario because some of those bears certainly worked against us. But overall, good past week for the bulls. Oil up nicely today, up about 1.8, and then gold up slightly. As we look at the advanced decline line, about 7 out of 10 stocks advancing today, and we've really improved the markets. About 70% of stocks are now trading above their 50-period moving average. So in the short term, we've been trending higher. We continue to trend higher. On the market news, PPI comes in lower than expected, which is good for markets. That's an inflation gauge. That's something that the Fed is going to be looking at, and we want to see those numbers trending lower. So the market's like that. The expectation was for 0.4. It came in 0.2. That's a good miss on the PPI, which is good for markets and good signal that inflation's coming down. Household debt has now hit a new 15-year high. So if PPI coming down was good, well, household debt going up, not so good. Obviously, credit card numbers, a lot of debt out there, a lot of people in a tough spot. And given how strong the economy and the markets have been coming into this year's been pretty disappointing. There's been a real shift and a real struggle for the consumer. The S&P, as we rally to the upside, we've targeted a few numbers. We're actually shy of, if you were to kind of look at the channel, this channel comes off and it's still up there a ways. So we've got some room to go before we kind of get up to the upper channel. And the 200-day moving average is a little higher. Those could both act as a little bit of a target, but you can see the market has now really hit and achieved that 400 number. That's a big psychological whole round number, so there might be a little bit of chop around here, maybe one more push to the upside. I don't feel as high a conviction here to be bullish as I did last week. I think this is a troubling spot for the markets because my inkling would be to get more bearish, but you want to be slow and you want to make sure that the market is giving you something you're looking for, confirm some things for you, and so on. And we don't really have that yet. So I always call it painting a picture. Draw up a scenario of how you think it's going to play out, and then watch the market and see if that's how it's playing out. It will give you confidence and a good sense that, hey, I'm in sync with what's happening and you know, things are working as expected. So here's the question I would ask: who has control and who's in pain? Well, we would say currently in the short term, bulls have control, they're pushing higher, and the bears are in the pain trade, right? They're experiencing the pain scenario. Certainly from last week's huge rally, the bears are in pain. So if they're caught in a trap, in essence, they have to capitulate, or that's a term that we use in the markets for throwing in the towel. They have to give up. And so we're going to be looking for signs that the bears are throwing in the towel and that the bulls are getting overconfident, right? That's going to give us a sense that we're probably essentially near the highs. So my thought is that we probably push higher here and inflict some pain and kind of force the bears to give up, right? And so what it will look like at the end of this is probably, a sharp move higher and then sort of an exhaustion candle, something that is big in size, but it's in the wrong spot, meaning it's probably going to be a big bullish candle. Look at some of these big bullish candles. You highlight some of these bigger sized green candles on here, right? These are all really big size bullish days, but where they happen on the chart matters. And so if we've been running higher, 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 and then we start to kind of go up sharply and get one of these bigger sized, more, kind of a punctuation mark at the end of the sentence, right? One of these big green candles is kind of what we're looking for up here in the air. That to me would be a sign that, hey, okay, now is the time, because bulls are getting overconfident. The bears are literally running, sprinting for the exits, right? The alarm has gone off and they're trying to get out. And that would be that kind of pinpoint of pain. Max pain to the bears is a good place to essentially take profits on your bullish trades and start to rotate a bit. So is that going to happen this week? I don't know. Probably not. I think that's a week or two away. But that's what I'm going to be looking at. That's the picture that I'm painting, a little higher in the short term and kind of inflict that final piece of pain. So if we look at the QQQ, there's a little room here. I don't love playing breakouts in against downtrends because you run into all this overhead resistance. I'd much rather buy the dip and so on. But if I were looking at this QQQ chart, I'd have to be sort of constructive on it, thinking that, yeah, we'll probably push a little higher here. I don't think it's going up, up, and away. I don't think we're coming up and going to take out these highs anytime soon, or even the channel, the trend line and such. But are we going to get up a little further? I think so. I don't think this is done yet. On the sector heat map, a little bit of weakness in healthcare, which has been a really good sector. Certainly, some of the tech names are bouncing back. The news out this morning was related to semiconductors, and those stocks really, if you're looking for kind of a final, spike up, like if I was long semiconductors where they had been going up, 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 and then today they had an explosive move, I'd certainly be looking to maybe take profits on some of them. But the reason was Berkshire Hathaway has started buying a big, big position in Taiwan Semi. Taiwan Semi is one of the largest semiconductor companies in the world. I think they might be the largest, and in terms of market cap size and so forth. A supplier for Apple and other companies for many, many years. And Taiwan Semi, Berkshire took a big position, 4 billion. I don't know that doesn't mean that they're going to keep buying more and more and more, but again, that's kind of a news item. The semis have a big spike up. I'd probably take some money off the table rather than jumping into them on that type of news. You don't want to be chasing after that type of news. We don't want to be reactive. That's a very rookie mistake is, oh, Warren Buffett's doing that. Well, let me hurry and rush in before it's too late. We don't want to do stuff like that. You use those type of items, I think, to take some money off the table, if anything, and hopefully you are positioned ahead of it. Or if you're not and you're a believer that it's going to continue to go up, you wait for the next dip, but don't chase on a day like today. Market outlook here, certainly in the short term, more bullish. Even the 20 period is now sloping upward and has recently crossed above the 50. I would give this less weight. I would give this less excitement. Why? Because we're in a bear market and the long-term trend is still down. So what happens? Well, a lot of times it's a bow tie pattern. You cross up in the correction and then you cross right back down as the bear market resumes. See the cross above and then the cross below? They call that the bow tie. See how the market corrects up? You cross above, not too long later, you cross below. The bow tie pattern as the markets fall. I think we're crossing up, and fast forward a little ways here, we very well may be crossing back down in the next few weeks, right? It takes time. You don't want to be impatient. This market probably has a little more rally to go, but kind of a bow tie scenario is likely in my view. Let's talk about potential bullish and bearish trades. So this week, I think there are still some good opportunities in both directions. On the bullish side, here's Archer Daniels Midland, ADM. Don't get this confused with AMD. This is not the chip company. This is Archer Daniels Midland. They're in fertilizer, things like that. Agriculture, I guess, is a better way, more so than fertilizer. But anyway, they're an ag play, and you can see the resistance up here, and we responded to that resistance very nicely. You can see that we had been through a big correction and we came back up, and we really used a lot of energy just to get back up to that level. So no surprise that you're kind of backing off here, kind of a cup and handle or ascending triangle. Either way you slice it, looks pretty good. I think ADM could go a little lower here, which would be the perfect buy. If it comes, say it just kind of choppy and pulls back a little bit further, would be ideal in my mind. Generally, when you get in the low 90s, there is a tendency, it's almost gravity. Gravity pulls you towards 100. So if I could get in, I mean, not at 95, but if I could get in closer down there towards 90, I think that's the ideal spot. Let's do some back of the envelope math. $95 per share, pardon me, 97.50, not 95, that's where it's at today. 97.50 is resistance. The support down here is around $70 per share. That's the size of the cup, right? From there to there. So you have about 27.50 is the size of that. The handle is usually about 30% of the size, so that just kind of gives us an idea of where or how far we'll pull back, which is about $8.25. 8.25 below the resistance of 97.50 gives us an ideal buy price at 89.25, so just below here. And that's why I said if you could get just another little choppy move down here to right around 89.25, and this is one that I think is more on my watch list than anything else. I'd love to see the market just back up a little bit for a few days. Maybe this stock kind of comes back there. Then I'm probably on the trend line. I have a perfect cup, and I'm buying right at the handle area. And I probably would buy a little before 89.25, call it 90-ish. If it comes down to about $90 and it's not, cascading lower, it's not too dramatic, I'm going to be a buyer down there. And I think you've got a very good risk to reward to 100, and probably will go even a little bit above 100 on that breakout. And that's where you take some money off the table. So call it around $90 per share is maybe where I'm going to be looking to buy. This one was actually an idea from a Maverick trader. You have some resistance here at 80 and a little mini cup and handle type of idea here. This pullback is right about where the handle should be. So I think in the case of BJ, you might just be moving right here, right now. So not as big a chart pattern. This would be a short term. You'd play this for a shorter time period, maybe a couple of weeks, not a couple of months type of trade like ADM, but an interesting idea. And then last but not least, we have Travelers. Now, Travelers stopped a little shy of resistance, but I'd say that was in the zone. This is the resistance zone. You can see this big process of We had a downturn. We've recovered back up. Again, I think you pull back a little further here before it's all said and done. 180, let's call it 186 is the resistance. 150 is the bottom. That's a 36-point range for the cup. So the handle being 30% of the size of the cup, so 30% of 36 is 1080. So back up from 186, and you probably come back to 176 or so, kind of where I'm drawing it in here. You could even call it 175. So my bulls, I actually would prefer maybe buying the dip a little bit, and we might get that. Today's a day where travelers had kind of a rough day, but I think it's just a little corrective phase that'll likely resume right back up where it came from. On the bearish side, I mentioned that I pulled AMC out last week of the ideas list on the bear side, and I said it not because I wouldn't like to keep shorting it, but essentially it wasn't a good spot to keep shorting it. It's more of a profit taking, but I love these little spikes. Talk about these AMC, Bed Bath and Beyond, GameStop. They're these meme stocks, and when they have these little short squeeze spikes, that's where you want to re-engage and reinitiate. So, these little rallies are just an opportunity, I think, and they tend to fade off. Could this one go for another day or two? Sure. But as they fade off, they kind of grind lower, and then you take profits. And then when it gets the super spike, you initiate again, and you keep playing those bleed off moves to the downside. So we had pulled these as an idea last week, but fast forward 1 week, and we're back to possibilities. Amazon looks like a short. This one continues to really lag. Even today, when the NASDAQ was doing pretty well, it just was pretty disappointing price action. This is an area that it broke down from. And when you gap, where you gap to and where you gap from becomes significant. And it's left this gap open. So I suspect tomorrow is probably a little inside day. And then Thursday is when we would probably start to resume the downward move. So you might be able to use a little choppiness tomorrow where it touches 101, 102 or something. Assuming it's just chopping around, might be able to initiate a bearish trade sooner rather than later to the downside. And then Verizon, another on the bearish ideas list here. This bearish candle today kind of swallowed up the prior 3 days candles. It's failing up here to around the 50-period moving average, and while it may not go down really sharply, it should keep grinding, kind of, I'll call it neutral to bearish. It might spend a lot of time choppy sideways and working its way lower, but overall looks like one that will continue to lag. They've got some issues. I mean, a lot of debt on the balance sheet, which that debt's becoming more and more expensive and so forth. And people can tell, I mean, there's something in the fundamentals that investors do not like. The market has changed. Debt becomes much more expensive, and they have a lot of it. Markets are still in a long-term bear market, but we're in this kind of ABC correction, right? We had that first rally, then the Fed kind of knocked it down. And so that first rally was nice. The Fed kind of knocked it back, and everyone said, uh-oh, here we go again. And I speak for myself, I thought that we were going to have that next wave of upside, and that's exactly where we're at. So we're probably in that C formation of the correction. Does this fail? Yeah, most of the time it will, and I think this one will too. Question is when, and we'll have to be patient. Watch for those bears to really throw in the towel. That to me is the turning point where you can get more aggressive on the bearish side. Retail sales on Wednesday, Philly Fed on Thursday, earnings reports, plenty of companies that are impactful. Applied Materials, Cisco, Lowe's, Nvidia, Palo Alto, Target, and TJX. and plenty of opportunity out there in the markets. Hope you enjoyed the market roundup. Have a great rest of your day, and we'll see you next time. Goodbye, everyone.